I mean, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months it's an easy call. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. Valuations on these AI stocks are ridiculous. And what they've forgotten is that there's not enough electricity produced to do all these wonderful things. Two words, good luck. Or four words, good luck with that.
Okay, ladies and gentlemen. So today we have Bill Holter, known as Mr. Gold, on our show for the first time. And today we will look at the US economy, commodities, precious metals, advice for younger investors, and many other very interesting topics. So Bill, thank you so much for being here.
Thank you for having me, Vlad.
So much happening right now, Bill. Very busy times with the commodities, precious metals economy as well. But I would like to look at the macro picture first. So if we look at US economy, what would be some of the things that you are paying attention now, and how are you looking at the current economic situation?
Well, there's definitely a slowdown. I mean, you could see it in shipping. You can see it in cardboard box production. You can see it in visitations to Las Vegas. I mean, they're down what 18% year over year. The economy is without a doubt beginning to slow down. Uh, at the same time, with debt levels through the roof, and that's the problem: is that the debt that we've already taken on can no longer be paid in current dollars. That's the macro picture.
Right. And if we look at the stock market valuations, Bill, how are you seeing that whole situation with the AI, with the S&P 500 and the current valuations?
Well, you just got to compare it to the dot-com bubble of 2000. Evaluations on these AI stocks are ridiculous. And what they've forgotten is that there's not enough electricity produced to do all these wonderful things. And actually, the biggest commodity to be used for AI is got to be silver, and silver's already in a deficit situation.
And if we do look at these valuations, Bill, so there's two camps really. So one camp believes that, well, there's more, but there's two main ones. One camp believes that we're going to have this big crash and that's gonna normalize the valuations in a rapid way. But on the other side, could the US stock market do what Venezuela did, what Argentina did, with continue money printing, just keep going up in measured in fiat dollar?
Yes, absolutely, it can, but there will be a big pullback first. I mean, if you look at every hyperinflation throughout history, uh, there was always a crash, always a big panic, and then all of a sudden stocks stop dropping and they start going up like a rocket ship, but only half as fast as the currency loses value. And that's based on their local currency. I mean, you could look at, I think it was what, 2 years ago, the Zimbabwe stock market was the best one in the entire world in Zimbabwe currency, but not in dollars or not in gold. Gold is the measuring stick.
Hmm. And if we could talk a little bit more about the US dollar and how you believe it could perform for the next years and for the next decade.
Well, you said, and for the next decade, that's assuming that the dollar is going to be in its same form a decade from now, and I assume it will not. Uh, there's two ways that the dollar is measured. One way that mainstream media measures is it through the USDX index, and that's versus other foreign fiat currencies. That's meaningless. Whether the dollar is stronger or weaker versus the yen, the euro, the pound, that doesn't matter. The true valuation, as I just mentioned in the last question, the true valuation is against gold. And the dollar in the last year has lost what, 35, 40% of its value versus the dollar in the last 12 months. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold.
And with that being said, Bill, is it still important to have certain liquidity, certain amount of cash on the sidelines if we do get this crash in the stock market, which should inevitably put gold, silver, and miners under pressure as well?
Yeah, well, it's important right now to have some cash because you've got to pay your bills. You got to pay your monthly bills. But after this thing goes down, this is going to be a nuclear event. And if you've not read about the Great Taking, I would spend the hour to either read or watch a 1 hour interview on the Great Taking. When this goes down, banks, brokers, insurance companies, they're going to fail. And when they do, they're going to take your capital to fix their problem. So you're going to lose your money. Uh, after the crash occurs, what's the point of having dollars? I mean, yes, you should have some paper dollars, and they'll probably work for 10 days, 2 weeks, maybe 3 weeks until people decide, hey, I'm not giving you eggs or a chicken or a pig or whatever for dollars. I'll gladly do it for silver or gladly do it for a little small piece of gold, but I'm not going to do it for dollars. I'm not doing it for a piece of paper that has no backing.
And Bill, how would that new world look? Will there be a new currency, just very similar to dollar, but something different, or will they have to back it up by something digital, or will it be one of the maybe crypto currencies? How are you viewing the future from that perspective?
Yeah, they'll definitely try to bring out a central bank digital currency. There's no question about it. And the question is, what's it going to be backed by? Is it going to be backed by something real like gold or oil, or is it going to be backed by the full faith and credit of a bankrupt slash insolvent issuer? I, my opinion is they're going to try the first time. They're going to try to bring out a new currency that has no backing whatsoever. So what's the difference between having dollars in your bank account unbacked versus CBDC in your bank account unbacked? And I'm going to tell you the only difference is with a CBDC, you're not looking at physical currency. So they can turn your account off anytime they want. If you and I are doing this interview and they don't like what we're saying, and I'm sure they don't, uh, by the time this thing hits the web, your account and my account will be shut off. I mean, you could have $20 million in an account that you can't touch. That's gone. They've taken it. So yeah, central bank digital currency is definitely what they're gonna try to bring out. And you ask me what it's going to look like, and I'll give you a 2 word answer: Mad Max. Society is going to break down.
Right. And so do you think, well, I suppose you answered the question that the public will not really accept that sort of future. So how will this dynamics between what the government potentially wants and the public not accepting that, future and control?
Well, it's not just the public. What about our trading partners? What are we going to trade with? Are we going to try to trade with a central bank digital currency? I think trading partners after the dollar itself collapses, what kind of confidence will other countries have doing business with the United States? Remember, we're a deficit nation. We don't ship out more than we ship in. We ship more in, and we got to pay for it with something. And the question is, will foreigners accept that form of payment? And I say, no, they won't. Not with the first round of central bank digital currency that will be unbacked.
Just a very quick break, guys. So I've spent the last 12 months creating this course, Wealth Building Blueprint. I've put an unbelievable amount of effort into it. I cover investing, trading, speculating, business. The course is perfect for people who are still relatively new to this wealth building process. And I also offer 3 days money back guarantee. No questions asked. If there's absolutely anything that you're not happy with, you will get your money back. There's also a private community where you can ask me any questions, you can talk between each other, you can share news and things like that. The link will be in the description. Right now the course is at a 70% discount, and let's continue with the video. So let's talk about some of the ways that individuals could protect themselves from that potential future. And I'm sure you believe gold and silver has a big role to play into that. So at the current price, with gold above $4,000 and silver above $50 per ounce, how are you seeing these markets, and what are some of the things that you're looking at right now?
The best way to protect yourself is to have in your own mind, nobody's going to come to save you. So you need to prepare yourself for a system down, uh, maybe probably internet down, maybe probably communications down. I mean, I'm talking about living, like Davy Crockett 200 years ago. Uh, you need to prepare. I mean, obviously, the first thing you need to make sure you have is a clean source of water. You want to make sure you have some type of energy, something to create electricity for you. Because what's to say that your local utility, when everything goes down, is still going to be generating electricity? You need to have a means of protecting your position. You definitely don't want to be in a city. You want to be rural. You want to be away from people, so there are less threats trying to come and get your food stocks, your position. Obviously, you want to stock up on food uh, and just get yourself right physically, mentally, spiritually, because what's coming is a battle. It's a war. And you're going to be on your own. You're going to dial 911. Nobody's going to pick it up. So do the best you can to prepare. And one way to do this, once you've got your preparations started and well underway, one way to test that is go home on a Friday night, turn your power off, turn on your alternate source of power and see if it works. Uh, Try to cook over an open flame and find out that the pots and pans that you have, they're going to melt. So you need cast iron. You can go to my website, billholter.com. There is an icon up top of the page called Grizzly's Corner, and it is specifically related to preparations and survival. And there's some great articles on that. A fellow that used to go into central Idaho with a pack of mules for 6 months at a time. He's the one who wrote a good portion of the articles, and there's great links to products that he's used that he's happy with the quality. So, but it's a great resource. Grizzly's Corner.
Thanks for that, Bill. And it's very important to think about things like that because I'm originally from Ukraine, and when the war started, people who were prepared, who had saved up food, had alternative sources of energy, and while they were under occupation, they have done substantially better than people who did not prepare for things like that. So, because some people might think, well, Bill is just being negative. Whether that future happens or not, I believe it's still really important to be prepared for whatever happens because you never know what can happen. So thanks for that, Bill.
My pleasure.
And if we could talk a little bit more about gold and silver. So what do you believe were the main drivers that brought gold to these levels? Because if we look at sentiment, sure, people are more interested even in the West than before. But I think if you look at the big picture, still, if compared to Asia and other countries, people are still not that much interested in gold and silver in the West. So how are you viewing the sentiment and the main drivers for this price rise?
Well, you kind of answered the question yourself by saying the sentiment in North America is weak. The sentiment in the rest of the world is very strong. And plain and simple, the reason the sentiment in the rest of the world is very strong is because the United States, back in October, I believe it was, of 2023, commandeered $300+ billion of Russian U.S. Treasury holdings. And the rest of the world looked at that and said, hey, if they can steal $300+ billion from Russia, they can stomp us out like a spider. So central banks, sovereign treasuries, they decided they don't want treasuries anymore because those can be taken away. Just like CBDC, they will be able to take that from your account. But if you have gold in hand, or if these sovereign central banks and sovereign treasuries, if they have if they've taken capital and bought gold with it and they're storing the gold, they have the wealth. It can't be taken away from them. So plain and simple, the reason gold is where it is now is because the US dollar was weaponized, the SWIFT system was weaponized, and the US stole over $300 billion of US treasuries from Russia.
If we look at silver, Bill, is it the similar situation? Because of course in silver we also have that industrial demand. So how are you viewing silver overall, and which type of demand, the monetary and industrial, do you believe will play the bigger role in the future?
Silver will be gold on steroids in this move. Silver at 80, well, it's about 80 ounces now it takes to buy 1 ounce of gold. That's man's ratio. God's ratio, it comes out of the earth at 9.5 or 10 to 1. Which one's right? Which one's wrong? Is God's ratio wrong? No, man's ratio is wrong. At 80 to 1, silver is grossly undervalued, and it should be 15 or 20 to 1, which says that silver should outperform gold 3 or 4 to 1 from this level. Now, silver is a completely different market than gold. Gold is basically money. Silver, yes, it's money, but there's industrial uses, technological uses, medicinal uses, even warfare. Every time we shoot a Tomahawk missile, there goes a monster box of Eagles. You're talking about 500 ounces, roughly, to build those things. To answer your question is, which is going to be the more powerful buy? At first, I will first off tell you, it does not matter, because we're already in a deficit of what, 400 million, 500 million ounces per year. It doesn't matter, but where it will end up as a monetary decision. Yes, you're going to have industries fighting and scraping for whatever physical they can get. But when this goes down and when this breaks, I mean, silver's going to explode, gold will explode, and derivatives, the $2+ quadrillion derivative market, that will blow up, and that will bring in the great taking. That will take down the entire paper facade. But the final act, just understand that fear is a greater emotion than greed. Fear is the greatest emotion. And fear of losing everything is what's going to drive people into gold and silver.
Mm-hmm. And if you look at silver price measured in dollars, it has pretty much been stuck a little bit in this $50 area. So maybe do you have a certain spark?
Wait a minute. What do you mean stuck in this $50 area? We just got the $50 2 or 3 weeks ago. It pulled back to 46, and here we are at 54 again. So this is not, all you watched over the last 2 or 3 weeks is the overbought being undone. And here we are back to those highs, and we're nowhere near as overbought as we were then. This thing's going to go through 54, 55, and your next stop will probably be 60, 62 in very short order. I think over the next 6 months, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months it's an easy call. But do understand that along the way, if there is a failure to deliver, the whole game stops, because then gold and silver become priceless. If you can't get it, what's it worth? And when man cannot get something, they want it even more.
Yeah, so what I was more saying, do you think it's going to be the retail investors that would break silver through that area, the demand from the retail investors?
No, I mean, retail's gonna jump on board. Retail right now in North America, as I mentioned, is soft. You had big buying the last, 3, 4, 5 years, and then this year you had, when we got higher prices, you've had a lot of sellers, legacy sellers, and you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, Eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners. And they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States, including Silver Eagles, which right now is by far the most expensive form of silver. So what I'm telling you is if you're buying silver, buy junk. It's the best form to own, and it's the cheapest form right now to purchase.
Bill, how are you looking at miners, so gold and silver mining stocks?
I mean, miners have been the star for the year, and I think they're going to be the star going forward. The only problem with that is if you buy miners and you have it in a brokerage account and your broker goes down, your stock's gone. Again, go back to the Great Taking. If you've not watched it or read about it, do so, because otherwise you're playing a game with two hands tied behind your back and hopping on one leg. The bottom line is when institutions go down, you're going to lose your capital. So if you want to buy miners, go ahead and buy them. I think you'll make a ton of money, but make sure you have the stock certificate, because that will act as the title to your car or the deed to your house. That is proof of your ownership, and it can't be taken away. But it will be taken away. Just so you understand how this works, Vlad, think about all these brokers that are advertising $7.95 for a trade, whether it's 100 shares or 1,000,000 shares. It doesn't matter. $7.95. What kind of business model is that? There's no way they could be profitable. Fly around in corporate jets, have huge corporate buildings. The way they're making their money is when you buy a stock before settlement day, that stock is probably lent out. So they're earning interest on your stock that they've lent out on money that they didn't have to put up. That is the profit model for Wall Street, is to lend out your securities. And when the music stops, you're not going to get your securities back. So that's why you want the certificate in hand.
And I've noticed, Bill, recently that all of these brokers, they're pushing cryptocurrency really, really hard. They're advertising it everywhere. Do you believe there's any specific reason for that, or is it just based on sentiment because young people are so much interested in that?
There could be many reasons. It could even be false belief in it. I mean, my personal opinion is the cryptocurrencies are an absolute 100% perfect accounting on blockchain of nothing, of digital air. When this goes down, do you really believe a farmer's going to take a Bitcoin?
Yeah. That's a very good point, Bill. A very good point. And would there be any other commodities that you are interested in? Maybe copper, uranium, oil, gas, and things like that?
Gold and silver, they are money. And this is about money. This is not about, it's not about use. It's not about production. It's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And the dollar is going to crack, credit is going to crack, and when credit cracks, the real economy stops because everything runs on credit.
And Bill, how would the rest of the world look during these? So if this does occur, what would happen to all the other countries?
Well, right now, the United States dollar, call them the treasury bonds, the treasuries represent, I don't know, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and that the Costa Rican central bank is exclusively U.S. Treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country.
Mm-hmm. And Bill, what would you say to those people who would say, well, the US can keep kicking can down the road for many decades, and then they can sort of do this transition softly?
2 words, good luck. Or 4 words, good luck with that.
Okay. So, Bill, I like to ask this question for the young audience. If we have an individual who's still quite young, he or she eager to learn how to invest, they want to get involved with this well-building path, what advice would you have for that individual so that they don't make too many mistakes and can start properly?
I would say start off buying silver if you got a fair amount of money. Add gold to it, but learning how to invest in the stock market, the bond market, the traditional markets right now, why waste your time? Because that system is going to end. That system will stop and it will reboot. And yeah, you're going to have to learn along the way. But the reason you own gold and silver is because those are the only two monies on the planet that cannot bankrupt in a world that's bankrupting.
Well, these are all the questions I had. Is there anything else that maybe we haven't covered that you would like to mention?
We could probably go on for hours and hours, but I would just leave it with do the best that you can. If you're skeptical that the system's going to come down, understand that it's math at this point. It's no longer Bill Holter's opinion. 6, 7, 8 years ago, yeah, it was my opinion. Or 10 years ago, it was my opinion. It's no longer an opinion. It's fact. It's mathematics. Do the best you can. And if you don't believe it, you still should prepare. And preparing is not going to put you behind. I mean, if you're storing food, eventually eat the food. If you've bought gold and silver, they can't bankrupt. And with the amount of money supply that is going to have to be printed to service all this debt, they have to go up in currency terms. So if you don't believe that this is going to happen, you should still buy gold and silver because mathematically, in paper currency terms, they're valued multiples of where they are right now.